I'm Greg Hunter. Welcome to USAWatchdog.com. With us coming on right now, personal friend of mine, but a smart guy, a market guy. He's just become really a great friend over the past few years, and I respect him more and more because his calls seem to be getting better and better. Nobody's 100%, but this guy's close to it. Of course, I'm talking about Gregory Mannarino of TradersChoice.net. Gregory Mannarino, thanks for joining us today on USAWatchdog.com.
Greg, I'm thrilled to be back. Thank you for having me.
Well, both you and I were both listening to Yellen. I mean, for you guys that don't know this, Mannarino doesn't do this by accident. He doesn't just make a couple of lucky calls. He lives, eats, and breathes the markets. And I was sitting in my car listening to satellite radio and listening to Janet Yellen. And, I mean, it's almost like she's moronic the way she has to dance around the subject of her liquidating this big, $1.8 trillion, $2 trillion, toxic mortgage asset stuff that aren't toxic anymore. But anyway, he calls me up and says, dude, did you just hear what Yellen just said? He said, this is a game changer. She went from raising rates last month to now, maybe not so much. And I'm thinking, wow, he said, this is going to be one new high after one new high. And sure enough, out in the stock market, and sure enough, that's what we got. What do you make of this, Greg? I'm going to show the stock market chart here, too, while you're talking about this. Sure enough, we made a new high after she got really dovish on rates.
Greg, look, it's more of the same thing. It's incredible. It's even hard for me to get my head around it because, again, this is got to be the flip-flop of all flip-flops. At the last FOMC meeting, Janet Yellen was practically pounding the table, talking about how they're going to continue to raise rates, they're going to start unloading their balance sheet here, and then she does an absolute 180. I can't tell you, I'm sitting there in real time watching it. My face dropped. What did I do? I'm going to tell everyone what I did. The moment I heard this, I went onto my computer platform and I started buying everything I could. I went and I bought the FANG stocks. I said, this is it. Everything is on sale because this market is going to keep going higher here. Look. Let me put a perspective on this in the most simple way that anyone can understand, because I talk about it all the time, but I don't think people really get it. I have gone over, I don't know for how long now, where I keep talking about distortions in this market that continue to get worse. So here's the most simple perspective I could put on this. Does anyone here listening to the sound of my voice, wherever you are on this earth, okay, believe it's a coincidence that the stock market is at a record high right now? Housing is pretty close to an all-time record high when interest rates are pretty much near an all-time record low. Does anyone think that's a coincidence? Absolutely not. The Federal Reserve, Greg, has again created a freaking monster. And these distortions, like the ones I just spoke about, are now going to get much worse because Janet Yellen has now given the green light for these markets to go record up, record up, record up. Period. That's it. It's interesting, too, what's happening to the U.S. dollar. It's getting melted down for months.
Hold on just a minute. Let me get in here with this chart. So here's the chart. I don't know if you can see it, but this is basically right here is when Janet Yellen said, and you called me and said, this thing's going to go straight up. Boom, boing. And down here, this is where you said when Trump got elected, this is right around November, right here. And you said, this is a game changer. This is a game. I think Hillary, this chart would have been going down. But when Trump got elected, it's gone up. He's put in $11 trillion dollars. Wait a minute, let me go here. $11 trillion in the global markets. And then here is Yellen making her announcement. And here we get another ding record high here. Meanwhile, and then I want to get to this here. Here's what you've been harping on with the dollar. I mean, this is going back to, March of this year. And it was about 102 on the Dixie. And then now it's down to about 95 and change. Yeah. Let's talk about first this dollar chart, and I know you've been talking about it.
Yeah, well, absolutely. In the same manner, and I do appreciate you bringing that up with regard to when Donald Trump won. I said that was a game changer. Market was going higher. That's exactly what happened. In the same way that that when that occurred, what Janet Yellen has just done is also a game changer, a 180 on the market. We're going to now see record high after record high. There's nothing holding this market back. Janet Yellen has now promised to keep interest rates suppressed artificially. There's no normalization of the Federal Reserve balance sheet in sight here. And that U.S. dollar that you were just showing is going to continue that downward trajectory. Look, it's a random walk with a downward drift. This is going to continue for as far as the eye can see. And how do we know that to be a fact? Well, the Federal Reserve, I'm not making this up, has promised to create inflation through any means necessary. That's all they keep talking about. They keep missing their targets. They just missed their targets last week once again. They will do this again by printing cash out of thin air, adding digits to a screen. Forget about unloading their balance sheet here. It's not going to happen. And I said that, if you recall, too. I even said it on my own personal blog. I said, I doubt that the Federal Reserve is going to do anything with their balance sheet this year. They can talk all they want to talk. But the fact of the matter is, I think Janet Yellen got spooked when she started talking about this, and we saw yields start to spike up. The U.S. 10-year went from like a 2.19 to almost a 2.39 in a matter of a week or two. Look, the Federal Reserve has got to keep a very tight rein on the bond market, because if they do not do that, we are going to experience a meltdown in the debt market.
Wait, hold on. And I'm going to take the other side of this, because this is where we kind of differ. So she wants it both ways. She wants to say, we're not going to raise interest rates, but they want to dump this. And you pointed this out to me. You called me up, I don't know, this is a while ago, when they first made this announcement. He says, that was toxic mortgages. Yeah, that's right, it was toxic mortgages. And now it's not toxic anymore at the moment. So they want to, unload this crap, right? And so, and I'm thinking, if they do that, though, aren't they going to skyrocket interest rates? Don't they want to at least try to dump this 1.8 trillion of absolute junk off onto the market? And if they try it, maybe they might blow it up. I mean, a lot of people say don't have too much confidence in the central banks. Ron Paul just came out and said don't have a lot of confidence in the Fed, especially just before a crash. So what say you? Can't they make a mistake here and try to dump this load of junk and spike rates and cause a market crash?
This is how I see this playing out here. And you and I have actually spoken about this, and you actually brought this up, if you remember, a while back. We don't know what's really on the Fed's balance sheet with regard to the mortgage-backed securities right now. For all we know, they have been dumping them, and no one has an inkling about it.
That's what I think. I wouldn't think they would telegraph their stuff out that far. I think they've already been selling it into the market, and we'd like to do that. So Shazam, then they wake up one day and they only have a $500 billion or $300 billion or whatever they have left. And we said we were going to do it, and they've already done it. I think they've already done it. But go ahead. I digress.
Absolutely. I think you're right. And I, as a matter of fact, if you recall, we were on the phone. I was pacing around my house over here when you said that, and a light bulb went off in my head. And I said, Greg, I think you're absolutely right on that. We don't know what's on their balance sheet with regard to mortgage-backed securities. What does get under my skin, Greg, and I want everyone to really pay attention to this, and because this is the one thing that, above all, I think bothers me. When the Fed scooped up all of those mortgage-backed securities from the banks at the time, they were known as toxic assets. Remember, we spoke about this. Now they're not so toxic anymore. The Fed has reinflated a housing bubble, so they can dump these things, and they're actually worth something. I think that's a criminal act. I think everyone that lost their homes at that point should be compensated. Of course, they won't. The public always gets fleeced. This is a royal fleecing. There's no doubt about it, and it really. I just can't tell you how bothered I am by that. Now, with regard to reinvesting into the long end of this curve here, the Federal Reserve, the Federal Reserve is really stuck, I think, with holding whatever is on their balance sheet with regard to bonds until maturity. No one's going to want to buy these things yielding lower than they are right now. So they're stuck here. So when these things reach maturity, they're just not going to reinvest again the funds into the long end of the curve. This is what they're saying. But I want people to think about this. The Federal Reserve's balance sheet, okay, I hope everyone is sitting down for this. In 2008, just prior to the meltdown, was somewhere around $900 billion. Now we're at $4.5 trillion. Think about that in less than 10 years. It's unbelievable. We've never seen anything like this. And this goes back to exactly what you were talking about, Greg. The Federal Reserve never had a plan to do this. They never had a plan to unwind their balance sheet. They're flying by the seat of their pants. This is uncharted territory. The Federal Reserve does not have not one viable model to gauge how this is going to affect our economy and the global economy as they, again, attempt to normalize their massively abnormal balance sheet. So, of course, there's huge potential for mistakes to be made here. And I wouldn't be surprised. Look, would any of us here, you too, Greg, be surprised if the Fed gets it wrong once again? The Fed's always wrong. They're never, ever, ever right. I want people to do a little research about that statement that I just made because it sounds pretty profound, but the Fed's always wrong. They are always behind the curve.
Well,
they
I mean,
always get it wrong.
What did Ben Bernanke say? That the subprime would be contained.
Contained.
Totally wrong, or a total lie, wrong. Or both. I don't know. And then said, it wouldn't affect anything else. I mean, we weren't in a recession. Yeah, we were. I mean, you can't knock out housing and autos and the banks and not be in a recession. So how do you think this could go wrong? I mean, maybe the Fed really is announcing they're going to try to clear this junk. I would just wish we could just sprinkle some truth serum on like in the Jim Carrey movie where he had to tell the truth, and where she says, where she comes on and she says, well, we're just trying to dump this big ball of junk to bail out our banker buddies before it all turns to, sour again. That's and we don't want to raise rates and crash all of our junk. I mean, that's what she ought to say. I mean, that's really what it is. I mean, they would just like to dump this off on some suckers in the market, get rid of their balance sheet, and not raise rates. If they start dumping this and they oversupply the market with debt, then rates will go up, or they'll have to monetize tons of debt or whatever. I mean, I don't see any good scenario of this. I mean, you're going to hold $4.5 trillion on your balance sheet till maturity for 10 years or 20 years or 30 years or 30-year mortgages. Wow.
That's what they're going to do.
How does this go wrong? How can this go wrong?
Well, what I think people need to understand here is, in my opinion here, this is going to take decades. Their balance sheet is going to take decades to normalize. So what this means to someone like myself is opportunity. Opportunity upside down, backwards, and sideways. Across the spectrum. I mean, we know that these distortions are real. I talked about how, again, stock market at record high, housing at record high, interest rates pretty close to record lows here. So there's a massive distortion right there. And this has bled off to everything right now. Nothing has a real price discovery mechanism. Some things are outright being manipulated lower. I'm talking about hard assets, gold and silver. I'll tell you something else that's under attack lately as dollar alternatives, and that is cryptocurrencies. In the same manner that hard asset dollar alternatives, gold and silver, are being played with by the Wall Street banks, by the central banks. They're doing the same thing to cryptocurrency, despite the fact, Greg, that the dollar is going down. Anybody find that a little bit interesting? Well, you should. And if you don't, there's probably something wrong with you. It's just so in our face. But how can this all go wrong, Greg? Look, it's going to go wrong. It's already gone wrong. How do we know it's gone wrong? Again, look at the magnitude of the distortions in this market here. They're literally off of the charts. And this is going to normalize one way or the other. Either the market's going to call the Fed's bluff and this is going to correct the fair value in a very rapid fashion, or there's always the chance here, and I want everyone to sit down for this one too, that the Fed does get it right. I mean, maybe I'm really going off the deep end here. Maybe it's possible the Fed will maybe get it right and this time here and manage to normalize their balance sheet without causing massive ripple effects around the world. I'm not sure. I doubt it. And I think that goes back to what we just heard from Janet Yellen here. Look, when Janet Yellen made that 180 with regard to, okay, she said specifically, well, interest rates are kind of where they need to be. signaling to the market that maybe there's one more hike coming, signaling to the market that we're not going to do much to our balance sheet. And you saw what happened to the stock market, record and then record 2 days in a row, 3 days in a row, whatever it was, is going to continue. I mean, I'm not saying it's going to go straight up. The market might pull back a little bit, but the trajectory is higher because of Janet Yellen. She's going to fleece some people here, and people that have interest earning accounts, you're dead in the water, while enriching the Wall Street banks or enriching the rich people. While people that know how to take advantage of this market are gonna benefit from it. I mean, look, I'm not gonna lie. I had a phenomenal trading week, everyone on my channel knows it. Look at the pics that I've been putting up on my website. To say the least, look, I don't want to sit here and sound all like, oh, Greg is all this and that, but I had one of the best trading weeks I've had in the history of my life.
Dude, you called it. You sat there and watched her do it, and you called it. I mean,
I walked right
on the phone and said, "I'm going to go long," and you did.
And I told everyone to do it on my own blog too, on my Steam It blog, on my YouTube blog. I said, everyone, this is a green light. This market's going higher. Bam! I went in there. I bought derivatives on Amazon. I bought derivatives on the Qs here. I think each one of those increased my calls 40%. Each of those 40% in a week. I mean, you want to talk about making stupid amounts of money? Well, there it is. This is what they're doing. And I'm not the only guy doing this. Are you kidding me? How many people are doing the same thing? The Wall Street banks are doing the same thing. They're doing cartwheels around their offices. Are you kidding? This is the setup here.
But here's what I want to bring this up. And this is what I want. You have people like, big money managers coming on right now. And they're talking warning. I mean, the latest warning came from another big money manager that says by 2018 this is going to blow up. Deutsche Bank is out with a report saying, the Fed has created universal basic income for the rich, and they can't get out of it. I mean, then we have other market calls. Just a few weeks ago, somebody said, well, this is going to blow up by 2018. And I got to tell you this. Carl Denninger says, we never hit the wall. In the housing crisis, we didn't hit the wall. Somebody got up one day and said, you know what? I don't like this. I'm going to sell this market. We never crash and burn into the wall. This is what Carl Denninger says. So that everybody knows the wall's there. And we're not going to reach the wall. And that's why they're getting all these warnings and all this other stuff. Can't the Fed make a mistake? I mean, I think Yellen wants it both ways. We're not going to raise rates. We're going to dump all this junk into the market, and that will in effect raise rates. But I want it both ways, and we'd like to do this before we get rid of all this junk, toxic junk that we bailed on our banker buddies with. We'd like to have it both ways. Can't the Fed make a huge mistake, especially when this market starts vaulting higher and higher and melts up, not down? Can't the Fed be making a big mistake here?
Of course they're making mistakes. They've been making mistakes forever. They're never going to stop making mistakes. All they've done is reinflate bubbles, create distortions across the spectrum of asset classes. That's it, period, the end. There's going to be a very few people that are going to benefit from this. I'm sorry. Most people are going to be melted down at a particular point when this all corrects to fair value. It's going to happen. I don't speculate on when. I don't even care when. I'll be honest with you. All I want to know for myself and for everyone that follows my work is how the hell can we rip the damn face off of this market and everything else to take advantage of it, because this is the golden age right now. We know these distortions exist. We know that these distortions are going to correct themselves. So I say, frankly, instead of worrying about if it's going to happen tomorrow or next week or next month, let's just capitalize on it, just like they are. There's no reason why we all can't play the same damn game. I'm sick of people laying down here and willingly being fleeced by the Wall Street banks, by the world central banks. We know what we need to do. Bet against this debt. Become our own central banks. Hold hard assets. Get out of debt instruments, including the U.S. dollar, which the Federal Reserve has promised to kill.
Let's say people aren't as good at trading as you are. And where would you tell people to put their money? Somebody asked me this, said, I know I should have gold and silver, and I know I should, pay off my house and whatever. Where would you put money, in this market if you don't want to trade it? I mean, if you don't want to be Greg Mannarino and watch, and live and breathe and eat it every day. I mean, you live and breathe this every day. You turn on a dime just like that. I mean, you may wake up bearish at 7 o'clock in the morning, and by noon you're going long. Yeah. Where do people put their money outside of the market?
Well, look, I think the number one place where people need to be looking, literally, and if you want to focus on one thing, is getting out of debt instruments, which means fiat currencies, which means the U.S. dollar here. I still firmly believe that the number one assets are hard dollar alternatives, real money. Silver is my all-time favorite. I can't stress that enough. I think it is so undervalued right now that, again, we're never going to see this again in the history of our lifetimes. The other thing that I know a lot of people don't want to hear about, but I do believe in this, is cryptocurrency. I think that the attack that we are seeing right now on cryptocurrencies in an environment where the dollar is falling tells us that's where we need to be as well. Look, this is what they always do. They want to distract you. Don't look here. Look here. So when you see this kind of attack that we're seeing now with regard to cryptocurrencies, the same kinds of things that we've been witnessing with the paper derivatives of gold and silver, you know that's where you need to be. Don't follow the crowd. Do the opposite of what the crowd is doing. You want to hold a debt instrument in this environment. If you're one of these people who believes that is a dollar bill, for example, right now, or believes that you should be buying bonds here because the rally is going to continue, I think you need to call your doctor. This is not where you need to be. Just get out of debt instruments. I hate these more than anything else. So I hope that trading is a whole different animal. It's a whole different thing. And you're right. I studied this morning, noon, night. I wake up thinking about it. I go to sleep thinking about it. It's just, it consumes my life. But this is how I'm making a living here. So this is what I need to do. Am I right all the time? Absolutely not. Do I make errors? Of course I do. If I didn't, then, if I told people I wasn't making mistakes, well, then I'd be the biggest liar on earth, because I don't care who you are. I don't care if you're Lloyd Blankfein, Jamie Dimon, even they screw up too, because the market is its own entity. It's a very difficult thing to kind of navigate. And I don't recommend this to everybody. There's no doubt about it. But again, you know what I do. I get a nice, for example, with regard to my last couple of trades, I did really well. I had one of the best trading weeks I have ever had. I promise that I'm going to take some of that and I'm going to invest that in hard assets, just like I have been doing. I am going to stockpile these things until I can't. And again, I'm not speculating on when the market is going to melt down anymore. For all I know, it's going to go on 10 more years. Do I think it will? Probably not, but I don't even care if it does. I just want to capitalize on it. I want people to capitalize on it. I don't want anybody listening to this to lay down and get fleeced. That's my mission here. Why I want people to understand what's going on, understand the distortions that are in place, and realize those distortions are real and those distortions exist, but we can capitalize on it.
Why are the big players, I mean, even there's a report out of, I don't know, one of the big banks saying you better pull the punch bowl away or we're going to get a wicked market crash. You got a lot of people, warning. Big players are warning either between now and 2018. I've heard nobody say this is going to go on longer than 2018. I hear February of 2018. I hear this fall a lot, and I've heard that before in past 16, 15, 14. It's going to get the big crash, and boy, they've kept it going. What do you make of all the chorus of big name money players and investors? It seems like their warnings are coming more frequently and are becoming louder. What do you make of that?
Well, I think that all of this has gone way beyond the point of where it could be sustained. But again, world central banks, the Federal Reserve, has found ways to keep this all propped up through any and all means possible. I'll tell you what concerns me and why I think that a lot of people are saying things like this is because despite the fact that we have a stock market at record high, housing near record high, interest rates near record lows, tax receipts are down, the money velocity is near historic lows, our economy is stuck nowhere with the GDP of 1.5% or so. So without the Federal Reserve keeping their foot on the floor, continuing, because this is what Janet Yellen is going to do, this all will melt down in the blink of an eye. The Federal Reserve has got to keep the juice going. The moment they decide to take away the juice, all of this is going to correct to fair value. It's going to do it no matter what. It's going to either do it when the Fed decides to pull their foot off the pedal, or it's just going to happen from some random event where people are going to start selling. I think the most of the action we're going to see is going to begin in the debt market, which has been the most manipulated by the world central banks. That's the only reason why we're existing right now. World central banks have gone through where no man or woman has gone before. This is why we're in uncharted territory, taking that debt market, inflating it in the biggest bubble that the world has ever seen. So I don't know
so what are you going to, I'm sorry, I don't mean to interrupt you, but we're buddies, and so, nobody cares.
That's all right.
I mean, it's okay. So what is your warning sign where you say, oh, I'm out, I'm done? Is it housing? Is housing rolling over right now? Is it are you getting signals in the bond market? Where are you looking to say, ding, 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 warning, danger? Mm-hmm. Where are you looking then? When are you going to know you're like hearing a dog whistle, I mean, long before we hear the bell ringing, you're like, so what are you going to be listening for?
Every single day I look at it, the yield curve. And I've been screaming from rooftops about the yield curve now for as long as I can remember. It's unbelievable. But 2 years ago or so, probably even on your show when we were talking about the yield curve, I said the yield curve is going to flatten out, possibly invert at one particular time. So what I'm doing is I'm watching the yield curve. The flatter that yield curve gets, the more worried I become that something ugly is lurking out on the horizon. If anyone wants to just look at a chart of a normal yield curve should look something like this. Let's just say short end of the curve, long end of the curve. We kind of look like this right now. So that's a big tell that there's an issue developing already in the debt market. And again, there's no way. None. And I don't care who they may think they are, how smart they may think they are, that they can predict when this is going to melt down, because it should have done it already. So again, we're in no man's land, no woman's land. I don't care when it happens. I know it's going to normalize at one point. I don't care. I just want to make it work for us all. That is my goal, because that's all we can do right now. We can't sit here and worry about, is it going to happen in 2018, 2019, 2022? Who knows? Could happen tomorrow. I have no idea. And again, I don't even care anymore. I just want to capitalize on it. I think that's what we all should be doing here.
At what point of the yield curve, what point do you say, oh, I'm sidelining everything, I'm out of the market? What point? What does a yield curve look like when you say, that's it, I'm done?
If it inverts, that would be if we get an inverted yield curve, I will take every resource that I possibly have and I will short the markets. I will short the Dow, I will short the Nasdaq, I will short the S&P. That's what I will do. I'll put every resource I possibly can into shorting this market.
What happens? What happens if we don't get a debt deal this fall? That we can't get a budget deal, we don't get a debt deal. We don't get anything in the September, October, end of the fiscal year, September. Do you watch that? Does that make a difference to you trading, or does it?
Of course it does. If I mean, that's definitely a fly in the ointment. Do I think they're going to end up not getting a debt deal? No, I think they're going to do it like they always do. And I'm going to sit here like I do every day. I'm going to look at my charts. I'm going to see what my charts tell me. I'm going to look at them without prejudice. I'm going to let them tell me what's going on here. I think this is the one thing that gets in the way of a lot of traders, is trying to read into the chart. Don't do that. Let the chart tell you what's going on here. Don't try to second guess what's going on. I fall into that trap even till this day. I think every trader on earth does. It's very difficult to pull yourself out of it and not have any emotion, but you got to trade without emotion. And without prejudice. You just got to sit there and let it all come to you. Watch the dollar, big time. The dollar fall is going to continue. Are we going to get a bounce here or there? Of course, it's a random walk with a downward drift. That's what the dollar is doing. You see those little bounces up and down? That's what it's going to do. So if next week the dollar gets stronger, I don't want to hear some imbecile tell me, oh, Greg, you were wrong. Oh, absolutely not, because that's what's going to happen. I guarantee you, people just don't get it. But that's
I mean, Trump wants the dollar lower.
Of course he wants the dollar lower.
He wants the dollar lower. He wants it to go down, which means he wants more inflation.
He wants more inflation. The Fed wants more inflation. A weaker dollar is market positive. It takes more weaker dollars to buy shares of stock. I mean, you can look at this from 1,000. We could sit here all day, Greg, for 12 hours and talk. I mean, it's really the truth. But this is what they want. I think after Janet Yellen's last talk, that really was a blip on the radar, I think, for most people, except traders like myself. Really understand that the dollar is going to be forced lower. The Fed is going to force inflation, not create it a normal way, because they can't do that. Our economy is dead in the water. So they're going to create it through any means necessary. This is their words. The stock market will melt higher here, so we need to be taking advantage of it. Is it going to pull back a little bit here and there? Of course it is. But the trajectory for the stock market is higher in this environment.
And the trajectory for inflation, higher. They're going to...
Of course.
So the big takeaway is they're going to force inflation, not deflation.
They're going to force it. They've been saying it over and over again. They want the dollar weak. Trump wants the dollar weak. Market participants want the dollar weak. Market participants want rates low. This is how they're keeping the charade going, Greg. If the markets are going higher, the general public thinks the economy is doing good. It's even though it's completely distorted, like I've been talking about, housing too. Everything is out of sync and nothing is real. But if the general population, if Joe Schmo out there says, hey, the stock market's at all-time high, that must mean our economy is doing well. Meanwhile, they don't say, well, how come the last GDP read, what was it, 1.4, 1.5? I don't even remember anymore. But we're going nowhere fast. Tax receipts are down. Wages are not going up, keeping up with anything that's going on. So, I mean, the signs are everywhere that we are dead in the water. So the Fed has got to keep on printing, has got to keep on stimulating, cannot dump whatever's on their balance sheet right now. I think with regard to the mortgage-backed securities, a lot of them are probably gone, but they're probably going to have to continue to reinvest in the long end of the curve to keep rates where they are. Look, the Fed's going to lose control, or the market's going to decide at one point that enough is enough, and this is going to normalize on its own. This I know for a fact. Don't know when it's going to happen, but I know it is going to happen.
And gold and silver are on sale, would you say? They're being, I mean, I had one guy write back, some guy was chiding people about how gold and silver prices are down. Some guy writes back and says, I am so grateful. I am so happy that they are down. That way I can just continue to buy them into what I know is going to crash. Is that something you would say, that they are suppressed, they are manipulated, they are out of whack on the other end of the spectrum, down?
Beyond any shadow of any doubt here, and we've seen this before. When markets look, cash simply goes from one place to another. Right now, because of the Federal Reserve, it's a risk-on environment, meaning equities. People are getting into equities here. There's going to be a point, and it always is. It happens throughout history. Don't take Greg Mannarino's word for it. Don't take Greg Hunter's word for it. Just do your own research. It's not that hard. When you get when risk on becomes risk off, which is going to happen, and how do we know that? Because it always does, but we've never had distortions like this before. These distortions are of magnitudes way worse than we've ever seen. We're going to get a hard reversal where you're going to see everyone running to grab as much of the hard assets as they possibly can, because they're so massively undervalued right now in a market that is overvalued. This is going to flip. And then when it does flip, at that point, there's going to be a time to get rid of those hard assets. There's going to be a time to be buying the stocks because they're going to go on sale. Who knows what the real Dow number is? But it's probably half what it is right now or less. Who knows? I'm just throwing this out there, but I can promise you, when this flips around, I'm going to be looking at things from the opposite perspective. It's just the way it is. Everything is a cycle. Everything is a frequency. Even sound waves have a frequency to them. The markets have a frequency to them as well. And if we can get into that rhythm of the market frequencies, the peaks and troughs with regard to equities, the peaks and troughs with regard to precious metals, the peaks and troughs with regard to housing, and every other thing you can think about, this is how you can become massively massively wealthy, and then do some good with that money. Pay it forward. Donate to charities. This is I can't tell you how I believe in this. I push it all the time, and that's why I tell people, you're making money off of my website picks, which I know you are. If you've been following them lately, please take a small percentage of that, maybe 10% of your trade, and donate that to a charity that you believe in. Don't donate that to Greg Mannarino. Frankly, I don't need the money. Donate it to a charity that you believe in, because you'll get by doing that, you'll feel better about yourself and you'll create a better world.
Gregory Mannarino, traderschoice.net, where all of his trades are posted for free. You can basically take a look at his performance and see if he's telling the truth or not, which he is. Gregory Mannarino, traderschoice.net. Thanks for joining us today on USAWatchdog.com.
Thank you, Greg. Thanks again.